And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Today we tackle one of the big topics for 2021, environmental, social, and governance, or ESG. It's been raking in money this year. Will it do so in 2021? Our guest today, John Hale, head of ESG research for Morningstar. Linda Ellinglee is the global head of ESG research for MSCI. And Kim Arthur from Main Management, an old friend of ETF Edge. Thank you, everybody, for coming. Linda, I want to start with you. Could you just sort of sum up ESG developments this year? I find it rather extraordinary. 2 years ago, everybody was interested in ESG, and there was really no money attached to it. That's really changed rather dramatically. Your thoughts as we end 2020 and some brief thoughts on 2021.
Oh, absolutely. So 2020 has been an extraordinary year. We were not necessarily expecting this to be the year where ESG really takes off, but clearly it has attracted a lot of attention, both in terms of the companies and what they're doing from an ESG perspective, but certainly from a flows point of view. In terms of going into 2021, we did just publish our annual ESG Trends to Watch report, and really at the top of the list of what investors we think are going to be paying attention to in 2021 is actually the topic of climate change. And that's because, despite all the lockdowns that we've had this year, we're still on track for a world that is going to be too warm to sustain life as we know it, according to climate science. And so, I think that, the Paris Climate Agreement, which was signed 5 years ago, you're going to see lots more investors really shifting capital towards less carbon intensive assets. So I think that, one of the really big focus areas will be in climate change.
Yeah, I want to return to climate change and some other issues I think are going to be hot, like diversity. But John, I wonder if you could just comment on just the whole ETF business and what's going on with ESG in general. What's amazing to me is how much money some of these ESG funds, these ESG ETFs have attracted, and also just how diverse they are in the different performances. So, for example, I see returns for the 5 largest ESG ETF funds out there. I see iShares USA Leaders ESG, SUSL, is up 9%. And then I see the Vanguard ESG is up 21%. That's quite a different diversity in returns overall. Can you sort of address the fact that it's sort of hard to pin down exactly what ESG is when you're actually buying these funds?
Yeah, that's interesting, Bob. I mean, all ESG index funds certainly are not alike, and that's what we have on the ETF side of the ledger. There is our passively managed funds, but yeah, there is a range. I mean, it ranges from what I would refer to, and actually iShares has started doing this as well, to sort of ESG aware portfolios that are just they're sort of slightly tilted towards ESG, trying to focus a little more in terms of overweighting companies that do better on ESG measures, underweighting those that don't. And while other index providers and index funds are taking it a little bit further and maybe focusing more on ESG leaders, avoiding laggards altogether. Different ESG funds also have different exclusions that they use. So they can be quite different. I think the best way to think about it is that you can add ESG onto a number of different investment styles and approaches, and even in the case of indexed investing, it's sort of the same story there. So you can have kind of ESG light, a stronger ESG component, and you can also combine that with different types of underlying investments.
Yeah. Kim, you're the guy who manages money here. I mean, how do you address this problem? When a client calls and says, I want ESG or more ESG or less ESG and want some advice, what do you put them in? Do you have to ask what kind of ESG they're talking about? How do you as a money manager handle the diversity of ESGs that are out there?
Hey, Bob, thanks for having us on, and great to hear your voice. Yeah, that is the big gorilla in the room there. First of all, as John just mentioned, there is no, we subscribe to multiple databases. There is no easy button to screen for ESG. I could screen for sectors, geography, duration. Can't screen clean up for ESG. So what ends up happening is, since there is no standard definition, each client that comes in it's almost a bumper sticker. Some want exclusionary, they want no casinos. Some want single themes, they want food production or plant-based protein or lab-grown protein. And then some want just best in class where it's almost a relative game. So it's not easy, and I think that's one of the reasons that scalability has been a little more difficult, because if I go to my client, each one, again, like I said, that bumper sticker is sort of what they are looking for, and it's very unique and very individualized right now.